They haven't completely gotten rid of the gold, but they are on the race to the bottom like everybody else. So Switzerland is where the dollar goes to die. Hey everybody, welcome. My name is Matthew. Thank you very much for joining. We are finishing up our series today on gold in central banks versus the amount of money that they print. Is there full gold backing of central bank money or not? All right, so in this series, we've looked at the Canadian dollar, the US dollar, the British pound sterling, one of the oldest fiat currencies, Swedish kroner, also one of the oldest fiat currencies, Norwegian kroner, and the French franc, also one of the oldest fiat currencies in the world. All right, a lot of data there. Do check those prior videos for more. I'm going to take them all off, and that leaves us one last currency in this data set, the Swiss franc. Now, unfortunately, from the Swiss National Bank, they only easily give data back to about 1960. That's all I have for the moment, but that's okay, because what I want to do in this video is to end with, without a doubt, without any shadow of a doubt, the strongest fiat currency in the world. And that is not the dollar, it is the Swiss franc. And if the Swiss franc is the strongest fiat currency in the world, how much gold is behind it? So we're in here already, the Vietnam era, the Bretton Woods era, and we don't have much left of the Bretton Woods era. We go till 1971, the Nixon shock, and gold floats freely. What was Switzerland doing? Well, look, they were actually much better during this time than any other currency. Now, remember, they didn't mark their currency to market. They would have a little bit lower statutory rate to make sure that everything balanced out on the books. But if you looked at the gold that was in both the central bank and in the treasury, and you did mark it to market, you get over 100%. 100% collateralization of the Swiss franc during the 60s. Very interesting. So if you look at, for example, the Canadian dollar, you don't have that. Even the US dollar, you don't. British pound sterling, you don't. SEK, NOK, French franc, even though we had de Gaulle claiming a lot of gold at the end of the 60s. So do see the prior video for more on that. Point is, Switzerland was very much collateralized by gold in the 60s. Actually fell a little bit right before the Nixon shock. And then once gold started to float freely, and most economists, by the way, said gold would go down in price during this time. Of course, it did not. But once gold started to float freely, the Swiss franc, as far as gold collateralization, that percentage is going to fly again, of course. So we go back well up over 100% mark to market, fall back down here, and then in the peak of 1980s for a couple second madness of the gold bull at $850 an ounce, the start of 1980s decade, about 300% collateralization gold to the currency. So in this case, Switzerland actually did what is typically said about the gold standard, that your currency will be as good as gold. Of course, the Swiss National Bank was printing money to buy Swiss bonds and whatnot, but for the most part, they actually held gold. Okay, so let's look now what happened after the bull in 1980. After it peaked, we went into a 20-year bear market, and it's a combination here, of course. Switzerland thinks that they have to ease up on the currency a little bit. Remember, too strong of a currency will make your exports expensive. So for that reason, the Swiss National Bank has had this tendency to weaken their currency along with all the other fiat currencies in the world, even though theirs was the strongest. So they do weaken it, and we fall well down here in the 80s and the 90s, just a constant decline of this wonderful triple collateralized ratio of gold to Swiss francs that the Swiss National Bank had issued. Again, mark to market. It's not going to say this on the books because they're not marking it to market. They're taking a statutory rate. But we get all the way to the year 2000, and actually right here about Brown's Bottom, where the Chancellor of the Exchequer, later Prime Minister Gordon Brown, sold most of the UK's gold, Switzerland decided, you know what, let's get off our gold standard. Alas, Switzerland was the last country in the world, certainly developed country, to leave the gold standard. They did that in 2000, and the ratio falls even more from here. On the eve of the financial crisis, the Swiss franc was only, quote, only backed by 50% gold, which is still amazingly high if we just look at, I don't know, Canada, which was almost on the path to selling their gold, Norway on the path to selling their gold in exchange for oil. Let's even look at the dollar, of course, much, much less. Much, much less. Okay, so this is very interesting. Even during the crazy days, mortgage-backed securities of the global financial crisis, the Swiss National Bank, if you marked to market the gold in their vaults, 50% collateralization of gold to the currency. Financial crisis hit, it goes even further lower, still only 28%. And now this is where Switzerland has joined the race to the bottom. They haven't completely gotten rid of the gold, but really from the post-GFC era, they have decided to take different assets on their books. They have some stocks. They have Facebook, Apple, that's well known. Of course, they have Swiss government bonds and some other assets. But gold is a much, much smaller component of their balance sheet, which is what this percentage is after all. Much, much smaller percentage to where today, March 2024, at first quarter ended 2024, 13% gold collateralization of the Swiss currency. So, one more thing I just want to say about the Swiss currency. It should be clear just in the modern era, in the post-Bretton Woods and even the end of the Bretton Woods era, the Swiss franc was the highest collateralized currency to gold. Let's look at how that actually affected the exchange rate. Okay, and let's look specifically against the king in the market post-World War II, the dollar. Here that is. Okay, so in the 60s, all right, when they still had a lot of gold in the Swiss National Bank, if you marked it to market, it was 4 francs to the dollar, over 4 francs to the dollar. And then, of course, we can see as the dollar starts to float freely against gold, gold floats freely against all other currencies. What happens to the Swiss franc against the dollar? With this chart going down, it means the dollar is weaker, the franc is stronger. And this, my friends, this chart right here is why you can see Switzerland is where dollars go to die. Down, down, down. We have a trend line, linear trend line here all the way till today. This is June 2024. It's about 0.9 Swiss francs. Okay, so 10% under parity. 0.9 Swiss francs to $1. So where it used to cost you 4 Swiss francs 50 years ago, now 0.9. So Switzerland is where the dollar goes to die. And it is definitely because of the history that they have had of being a sound money environment, a very interesting area geopolitically for property rights and financial property rights. And they had a lot of gold collateralizing the currency. Now, of course, like I said, they are on the race to the bottom like everybody else. And I am sure, go back to this chart, I am sure that the dollar would collapse further had the Swiss bank not devalued their currency, i.e. sold more gold, bought more Swiss government bonds, other foreign currency government bonds like Euro bonds or US bonds. I am sure that the dollar would have even devalued faster than it has on this chart. But as they say, the race to the bottom is a lonely place. So the Swiss government does not want to do that. The Swiss government wants to stay in line with other currencies, wants to keep its exports competitive, they like to say. Really, it just means they want to keep their exports cheaper so other nations buy them, so they devalue their currency as well. I don't claim that this is the right strategy. This is just the strategy that all countries, even Switzerland, have done. Taking a moment to remind you that this show is brought to you by Trezor, home of the original Bitcoin hardware wallet. For over 10 years now, Trezor means business in Bitcoin security and functionality. When using their wallet software Trezor Suite to connect to the Bitcoin network, you're automatically connected via Tor, protecting your identity and giving you full control of your coins in a fully open source manner, both on the software level and on the hardware level. So head on over to Trezor.io to grab your brand new Trezor Safe 5 with a secure element, as well as a ton of available accessories to back up your keys and keep your coins safe. So that's all I wanted to show you. One last point, if we put all the currencies in this sample back up, it's a lot of noise here, but I have a weighted epoch during this whole time. So let's put it in and just see how it is as the gold price has progressed, as world finance has progressed over the last 200 years. Here's the weighted epoch. Of course, you can't see it, so I'm going to take all the currencies off, and here it is in the dotted line. Started out with pretty rare data statistics, I admit. The gold standard, classical gold standard era, 28% backing gold to the currency. Post-World War I era, actually grew to 52%. World War II era was a massive fear. People turned in gold to central banks. Central banks turned in the gold to the United States, sent it abroad, out of Europe in particular, sent it to Canada, sent it to the Caribbean, sent it even to parts of Africa, which were safer, much safer than Europe at the time. Almost 100% collateralization if you weight the sample of all the currencies I've talked to you before. Bretton Woods era, what's the collateralization? 43%, all right? And Switzerland really pulls that weight up. This is weighted, so depends on the size of the balance sheet for sure. And then we get to the post-Bretton Woods era, the post-Nixon shock era, the current era that we are in today, the current monetary era, which is pure fiat. How much gold collateralizes or backs the currency? Only 14%. Okay? And to give you an example, let's put on Switzerland, which we just looked at. All right? Switzerland is pulling up this weight, we can say, because look at, again, this era goes all the way back to the 70s. So Switzerland is well above that. And what ends up pulling this weight well down is the United States. And others, of course, but the United States, even though it benefited from the peak in gold prices in 1980, really pulled it down, and let's just keep zooming in here. Post-GFC, of course, even Switzerland pulls it below now, and really all central banks are pulling this average down, trying to buy a little bit more gold. You have seen this in the news, right, in the last year, but really, it's not so much. They're maybe getting closer to the epoch average of 14%, but it's really nothing to ride home about saving the strength of these currencies or protecting the value of these currencies. They continue to be on a race to the bottom. So that's what I wanted to show you with this series. I hope it has given you some insight into what it actually means to back a currency. Currencies have very rarely been backed 100% by gold, as we can see for sure here in the pre-World War I, otherwise known as the classical gold standard era, limited data as it might be. And in general, as I said, they have been racing to the bottom, and we're going to see how that turns out for the next era of financial markets here now that we have ended the all-time low interest rates. Interest rates are rising, and there is more uncertainty in the markets. So we will see where sound money goes from here. Let me know what you think of this series in the comments. I really do hope that you like it. I hope that it's helped you, and hope to talk to you soon with the next video. Thanks.